macroeconomic outlook because it really does matter, folks, particularly for stock pickers. For instance, take a look at this table. This is a really important, interesting table. It gives you four economic conditions, right? You have Goldilocks, disinflation, reflation, and stagflation, and the assets that how they've appreciated. This, by the way, goes back to 1973, so it's pretty in-depth. And essentially, if you can figure out the economic backdrop, it helps you figure out where you want to position your portfolio. So with that in mind, I want to bring in our next guest, who's in a Goldilocks camp, right? Great Hill Capital Chairman Thomas Hayes. Thomas, so these four, you like Goldilocks right now?
I think so. I think you're seeing the labor market is loosening up. Labor force participation is going up. New supply of labor. Employers are getting the upper hand. They don't have to pay as much. And you have earnings growth. So you have this combination, not too hot, not too cold, perfect Goldilocks scenario. That's why we've been talking a little bit to you about REITs.
Real Estate Investment Trust does 18.1%. Obviously, though, you still want some exposure to the stock market. What's really interesting here is, for all of them, to be quite frank with you, gold has only really outperformed during stagflation periods, and we get a lot of folks who want stagflation. Would reflation be something? Because it feels like the market's been trading on a sort of reflation kind of feel right now. Commodities are coming on. You can see the CRB just broke out big time, and equities are, of course, hanging in there.
Yeah, reflation is a possibility in the sense, however, you need to keep in mind, M2 money supply is running $3 trillion above trend. So if you took the long-term trend line of M2 money supply and you look at the acceleration that we had post-COVID, we've done a lot of reflation. Now it's the lagged effects. It's being offset by the tightening of the Fed. So it's that kind of push-pull, that perfect Goldilocks. Not too hot, not too cold. A lot of money supply, but a lot of tightening at the same time.
I guess the only thing that can change that at this point would be a Fed misstep?
That's correct. Yeah, if they overshoot. I think at this point, Nick Timiraos, the Wall Street Whisperer at the Wall Street Journal, he was out over the week kind of setting the table that the Fed might be done. There's a shift in sentiment. And if that's the case, they can keep rates longer till maybe mid-next year before they start cutting. That's the perfect environment. They'll still be tight. Earnings will still continue to grow. I wouldn't chase the indices like your earlier guest said, just chasing the high beta stocks. I'd look under the surface for those opportunities and the bargains.
First, let's talk about earnings, though, because here, we've had this big swoon in earnings, a really big swoon in earnings, earnings recession. Yeah. I think for the most part, everyone agrees it's over. The big debate is how quickly it will rebound. Yeah. I would say 85 to 90% of my guests think that the numbers right now are too high. Yeah. The earnings estimates are too high. Yeah. Do you agree?
Yeah, they've been saying that for the last 9 months, and we've been on the show.
I thought you were saying for the last 9 years, right?
No question about it. Well, actually, what you're seeing is earnings estimates continue to go up just in the last few weeks from 246 to 248 and change for next year. And if I told you, Charles, next quarter, and we're in this information vacuum the next 2 weeks before earnings season started, if I told you earnings were going to be plus 3.5% for the next quarter, would you be short the market? The answer is probably not, because estimates are plus 0.5, and they've been running 3 percentage points too negative ahead of the quarters.
All right, so we've got some ideas that you like here, and they correlate with the first table, right? This is an industrial name. Yeah. Should do well. Stanley Black & Decker. Vornado is interesting, though. Real Estate Investment Trust. Yeah. We're still talking about empty buildings, work from home. Yes. Are you concerned about this? I mean, does this add an element of risk to this?
I was on the network in March talking about Vornado. People looked at me like I had 3 heads. I mean, it was unbelievable. Commercial real estate, all you heard every single day was this is the worst absolute thing. This is just like the malls. If you remember, you had A-class malls like Simon Property Group. Mm-hmm. They did fine. B and C went out of business. The same is going to be the case with commercial real estate. You're going to see the lower end properties that haven't upgraded. They're going to be in bad locations. They're going to be in trouble. Vornado is the best buildings in the best city in the world, Park Avenue, Madison Avenue, right around this area. It's all Vornado, and I would never bet against Steve Roth.
Okay, less than 30 seconds to go. Sound like you were dissing my man Gary on the mega caps. Is this a mega cap Intel, or is this a forgotten old dinosaur that should be bought?
You know me, I have a quality value tilt. I love this story because you get a free option on Gelsinger's plan to change, with the fabs and with the high-end AI chips in the future. I'm not even pretending that that's going to happen. What we're focused on is their legacy business. They control the PC market. They control the server market. That troughed last quarter. The stock's up from 25 to 38. We think it can be a $50, $55 stock. And you get a free option if Gelsinger is right.
I've always thought they were too PC-centric.
Yeah, well, that business has troughed. That's right. They've got 85% of the market there. Right. And as that reaccelerates, it's a 50-60. And as Gelsinger moves into the next phase, you may have a free option on all-time highs.
Sounds good.
Thanks so much.
Great stuff, Thomas.
Appreciate it, Charles.
Appreciate it. All right, folks, coming up, Are consumers tapped out? I mean, you know how I feel about it, but I can't wait to get Danielle DiMartino Booth because she's been focused on this and corporate bankruptcies. But the Fed feeling pretty strong there. You just heard it from Thomas. They may be ready to take a victory lap. She's going to be with John Lonsky. We cannot wait to go over all the data that you need to understand to make important decisions. But first, gas prices are on the rise. The Strategic Petroleum Reserve, it's at the lowest point since 1983. I got an idea. Why don't we tap it again? I like to ask Victoria Coates whether she thinks that's a good idea or not.